Hello, everyone. This is David from ABMTAX again. In this series about self-employment income, this video going to be around what I like to call general expenses, or expenses that are typical of a lot of people that people can claim. So, as we talked before in the previous videos, it's always people have to take advantage when they have self-employed income, and they have to look at every activity they do to earn that self-employment income, and to find out a way to expense it or declare it as an expense against your income. So a typical way of figuring that out, and I always have like this, like, a rule of thumb. It's like basically ask, if this expense was used to conduct the business, can you actually do the business without this expense? And if the question is no, then you actually have to declare that as an expense. So a typical thing, for example, your cell phone bill. So everybody have a cell phone. We're blessed to have that. However, if you're doing your business, you're using your cell phone. So again, the criteria is going to be, okay, if can I claim myself against my income? And it's the question, the answer is yes. Now it's very hard for us. We live in a day and age where a cell phone is becoming a necessity. So usually you have to be reasonable when you're claiming a cell phone bill. So I would say probably, we always tell people, look at 50%. And it's an arbitrary number because essentially you use more data nowadays because you're doing that self-employment income. So it is fair enough that you claim it. Now, will you have that data if you did not have that data usage, if you did not have that self-employment income? Probably yes or no. But again, it's understanding that, hey, this expense is actually is used at a certain level for the business. And a lot of people don't understand. If you look at it, you use your cell phone to book an appointments, to actually follow up, even like sometimes to search for a place. So cell phone would be an easy expense for you to declare. The second one that we find very common is meals. Now, if you have a job that really requires you to be on the road as a self-employed person, you're allowed to claim some meal deductions. But usually, we always recommend that, you have to be reasonable. There is some industries like the delivery industries, there's some government guidelines on how to claim that. And we always say, we like to use, to look at the activity. There's two ways to do it: a simple method or a detailed method. And that's not really relevant to self-employed people, but generally, we look at those laws and we try to ascertain what would be a reasonable claim, correct? Like, you don't want to really, claim that you're spending $50 a day on meals, on steaks. That's going to be unreasonable, depending on what kind of income you're earning. And then usually the government's view is, if you declare $1,000 in meals and expenses, actually what you can deduct is going to be 50% of that amount that you arrive at. Another expense will be a typical, membership. So a lot of times people, in order to earn an income, you have to spend money on different stuff. For example, you have to have a security clearance to do Uber. So that would be another tax deduction that you can declare. Other expenses could range to, for example, things as it relates to you buying some supplies, especially for the job. And as you can deduct those. Now, with the beauty with being a self-employed, I always like to say, is you be able to crystallize some expenses against your taxable income. Meaning, again, going back to this consistent theme or word that I like to use, is you as a self-employed person, you're able to claim things that you would have not been able to claim it if you were not self-employed person. So in a layman term, everybody pays for cell phone. But you as a self-employed person, you're able to claim percentage of it against employment income. Now, if you're working for Walmart as a 9 to 5, again, you're using your cell phone to be able to contact your employer and do something. But unfortunately, because it's a very, under the employment guidelines, you cannot claim that cell phone unless you're like a commission income. So therefore, being a self-employed person, it's a blessing. But again, you have to always understand the guidelines. And that's why it's always good to go and look up some guidelines from CRA or talk to a person like myself to figure it out. And these always, it's a person-to-person tailored answers. There's no right answer or wrong answer. It's just a matter of understanding what is your activity level and how it is reflected to those expenses. I hope this video helped you understand furthermore, and we'll be producing a single videos that will be able to answer those different expenses in detail. I hope to see you soon.